Let me ask you something. What would you do if one of your business partners suddenly stopped contributing, started causing problems, or just told you they want out? Sounds simple, right? You just remove them and move on. Well, it's not that easy, because if you do this the wrong way, you could end up in a legal dispute, lose control of your company, or even owe money you didn't expect. And I've seen this happen more times than I can count. Hi, my name is Bobby Casey. I'm the founder of BusinessAnywhere.io, and I'm an international tax lawyer. For over 20 years, I've been helping entrepreneurs all over the world structure their companies, protect their assets, and avoid costly mistakes. And today I want to walk you through exactly how to remove a member from your LLC the right way. Not the quick and easy way you see on forums, but the way that actually protects you. All right, so the first thing you need to understand is this. You cannot just remove someone from an LLC because you feel like it. An LLC is a legal entity, and every member has legal rights tied to ownership. So before you make any moves, you need to start with the foundation of your business, your operating agreement. Now, if you have one, and you absolutely should, this document is going to tell you exactly what you can and cannot do. In many cases, it will outline the process for removing a member. That could include things like voting requirements, buyout procedures, or specific conditions that must be met. And this is really important, because if you ignore your operating agreement, you're not just making a mistake. You could be breaching a legally binding contract. And that opens the door to lawsuits. Now, assuming your operating agreement does include a removal process, the next step usually involves some form of voting. And this is where things can start to get a little uncomfortable. Because depending on how your LLC is structured, you may need approval from other members, or even a unanimous vote. In some cases, the person you're trying to remove might still have voting rights. Yeah, awkward. So what you want to do here is make sure everything is handled professionally and documented properly. That means recording votes, keeping written consent, documenting meetings, basically creating a paper trail that shows you followed the correct process, because if anything is challenged later, that documentation is what protects you. Now let's talk about the situation nobody wants to deal with. What if your operating agreement doesn't say anything about removing a member? This happens more often than you'd think. A lot of people either skip the operating agreement entirely, or they use a generic template that doesn't cover real-world scenarios. And when that happens, you're no longer operating based on your own rules. You're operating based on state law. And every state handles this differently. Some states allow removal under certain conditions. Others may require court involvement. And in some cases, you might not be able to remove a member at all without their consent. So if you're in this situation, this is where things can get complicated very quickly. And honestly, this is where you want professional guidance before making any decisions. All right, now let's assume you've cleared the legal side and you're able to remove the member. The next big question is, what happens to their ownership? Because here's the reality. That person owns a percentage of the company. You can't just erase that. So in most cases, what you're looking at is a buyout. That means the remaining members, or the company itself, will purchase that person's ownership interest. Now, how do you determine what that ownership is worth? Well, ideally, your operating agreement already defines a valuation method. Maybe it's based on revenue, profit, or a predefined formula. But if it doesn't, then you're entering negotiation territory. And this is where things can either go smoothly or become a major conflict. Because if both sides don't agree on the value, you can end up in a dispute that drags on for months or even years. So getting this part right is critical. Now, once you've handled the ownership and financial side, you're not done yet. This is another area where people make big mistakes. Because removing a member isn't just about internal agreement. It has to be reflected everywhere. You need to update your operating agreement to reflect the new ownership structure. You need to update your internal records. And depending on your state, you may also need to update your official filings. Some states require you to report changes in members or managers. And beyond that, think about all the places that members might still be connected to your business. Bank accounts, contracts, payment processors, legal agreements. If their name is still tied to any of those, it can create problems later. So you want to go through everything and make sure it's fully updated. Now let's talk about something that often gets overlooked. Taxes. Because yes, removing a member can have tax consequences. Depending on how the buyout is structured, it could be treated as a sale and a distribution, or something else entirely, and that affects both the person leaving and the remaining members. So this isn't just a legal process, it's also a tax event. And if you don't plan for that properly, you could end up with an unexpected tax bill. Now, I want to point out one of the biggest mistakes I see people make in this situation. They try to handle it informally. They have a conversation, maybe a handshake agreement, and they think that's enough. It's not, because from a legal standpoint, if it's not documented, it didn't happen. That person could still legally be considered a member of your LLC, which means they may still have rights to profits, decision-making, and access to company information. And in some cases, they could even create liability for the business. So skipping the formal process is one of the worst things you can do here. So if we bring all of this together, removing a member from an LLC isn't just one step. It's a process. You need to start with your operating agreement. Follow the proper legal procedures. Handle the financial side correctly. Update all records and filings, and understand the tax implications. If you do all of that properly, you protect yourself, your business, and your future. And if you need help with this, whether you're restructuring your LLC, dealing with member changes, or just trying to make sure everything is set up correctly from the beginning, that's exactly what we do. Through our Digital Nomad Kit, we help entrepreneurs with company formation, registered agent services, compliance, bookkeeping, and personalized consultations to make sure everything is structured the right way. You can find more information in the links below. Hope that helps, and I'll see you in the next video.